and welcome to our next event in the series of Springboard 2021. So we know last year was tough for many startups, as well as being tough for everyone in general. But I know for a lot of us founders, having to work at home and being away from the community and our workspaces has been tough. So what we want to do at the start of this year is to pull on a series of events. So we've had 15 events scheduled for January and February, and these are all aimed, free events aimed to help you start the year strongly and really supercharge your startup. Next slide. But first, just tell you a little bit about myself and the Entrepreneurs Collective. Like you guys, I'm a founder. Originally, I was found as a lawyer and data protection officer, but I went a bit rogue and I set up a dating app a few years ago. During that journey, obviously, I had a lot to learn. So, as a lawyer, I was used to reviewing legal documents and business meetings. That doesn't help you much when you're trying to design and build an app. But there was lots of other bumps that I hit along the road. I didn't know where to source investment. Once I had my friends and family had given me some money, where did I go to next? I didn't know who to talk to. There were times when I thought the company was going to go under, and we very, very nearly did a few times. But who do you talk to? You can't necessarily talk to your family or friends. Where do you go to ask for referrals? Like, how do you find good developers or good mentors or people? And when I went out into London and went to some events, frankly, most of the time I was being sold to. People were trying to, it's bad quality people. I struggled to really find a good community. But thankfully, being an entrepreneur, I got together with a bunch of my fellow founders and we started putting on our own events. So this is our first event, which was a pitch competition. So we got 10 founders together and we all invited our investor friends. We helped raise investment for each other. So this is where our mission comes from, which is founders helping founders. And I really do believe that there's no one who can help you quite like another founder who's been there and done that as well. We have a lot of different membership benefits to help your startup to succeed. Everything from these online events, pitch competitions. We help run industry reports, can give you access to mentors. We do deck reviews and give you feedback, and we have a whole bunch of credits and workshops and a private investment network. Next slide. So in terms of our events, we have another one which is on next Tuesday, which is how to negotiate term sheets. This is being run by 7 Legal and is a really great workshop for anyone who is considering doing a funding round, especially if they're moving into sort of scale up territory. But we are very lucky today to have Buzzacott with us. Now, Buzzacott is a top accountancy and were our very first sponsors to get involved with Entrepreneurs Collective. I was very happy that they saw the entrepreneurial spirit that we had and were keen to get involved. I love having these guys as a partner because not only are they great accountants, but they really understand the startup space and the scale up space. And these guys really know their stuff. So I'm looking forward to hear what they have to say on how to scale up a finance function. So I'm going to hand over to Simon and Cliff, who are running the session. Daniel will be moderating in the chat. So if you have any questions, pop them into the chat as we go along. Simon and Cliff might take the opportunity to answer some of those questions, or if not, we'll loop back around to the questions at the end. Daniel has very kindly put my LinkedIn in the chat. If any of you guys want to connect and chat startups, please do. I love doing it. And we've also got the speakers' LinkedIn profiles there as well. So please follow those guys. But less about us and now over to the main event. So over to you, Simon.
Thanks, Mike. Much appreciated. Yeah, I think just to reiterate what you've done at the EC, there are a lot of events online and a lot of people offering advice, but genuinely what the EC has done over the last year or two since we've been involved has been fantastic. And I think you can really get a lot out of it in terms of supporting each other. Everyone in this call and in the community can help someone else, and it's not always just the people who you're coming to see. So do make the most of that. I'm going to ask, Cliff's going to be in charge of sharing screen, so it'll be like a government NHS health briefing, and I'll ask to share slides.
Simon, if there's a way to put a cat filter on your face, I think that would go down very well. I don't know if you saw that Zoom.
Say that again.
The cat filter. I don't know if you're the Zoom or the lawyer who put the cat face on his screen. Oh, okay. Well, yeah. No, that would be good.
Yeah. So I'll give a bit of some thoughts. Just to sort of set the scene in terms of where we're at. The market and currently in terms of the finance world is very much open, as Mike sort of alluded to. There is a lot of investment out there, and we were talking just before the call about the VCs and the investors in the marketplace who have shut a lot of funding down sort of this time last year, and we had a transaction we were trying to complete literally went pear-shaped on one of the days when the market crashed around, I think it was March 9th. And literally all investors have sort of come back, including the investor that pulled out on that day for that particular deal. So we're just seeing sort of that pent-up demand very much in the marketplace. So this session is about very much sort of getting ready and preparing for those sort of investment events. And one of the most important sort of factors in that, in terms of preparation, is getting your team in place in terms of finance personnel and finance function. And it's just a fundamental in terms of having those key events. What we want to make the session really interactive. It's really hard. We love doing the live events, so everyone is not shy in this community about speaking up. So please do use the chat for sensible, polite discussions and questions. We'll try and take them as we go along. I think Mike said we had some trolls at one EC event who started posting inappropriate things. So hopefully we haven't got that.
So fingers crossed we got rid of that. Yeah, we don't want a repeat of our last where we were trolled. Fingers crossed though.
Fingers crossed. So yeah, absolutely feel free to post stuff, and if we can answer it immediately, we'll do. Otherwise, we'll do it at the end in the Q&A, or we can take it offline if it takes longer. So before Cliff is going to run through the kind of top 10 tips to optimizing your finance function, but I'm just going to take you through a bit of background. And I suppose, I don't know if anyone saw, there's an article in the FT and various other papers picked up on how directors are going to start to be made potentially criminally prosecuted for their failure in their numbers and their financial statements. And it was sort of big headline news. And I think as an accountant, you sort of think, there's not really a news story there, because in a sense, as owners and founders of your businesses, you have to be responsible for the numbers you produce. So this isn't to scare you, but to have a good understanding of your numbers is just not only sort of fundamental in terms of proving your business to investors, but from a regulatory and a sort of compliance point of view, it's just key that you have some sense of what goes into the accounts. There's not a sort of, out of this, you're not going to get this is the answer. There's not a one size fits all in terms of finance team. There's various different approaches that we'll talk you through, but there's sensible suggestions that we can make in terms of different positions that you are in your business and your growth cycle. And I guess sort of just to reiterate again, ultimately investors look at the skills base of the team, and I don't think, from my perspective, they don't expect founders to be, professional accountants, lawyers, salespeople, CEOs, CTOs. You've got to just know your skills and know what support you need at different levels. We're gonna do a poll as well, because we're interested in sort of what systems you're using. So I think Daniel is going to post that, which should come up at some stage. I'm not sure how you can access it. There you go. Seamless. So you can vote for what current accounting system you use. If you use no accounting system, if there's something else that's not on on the system on your that you're currently using. Next slide, please, Cliff. There we go. There's some bright and happy looking faces, pictures taken definitely before the pandemic starts, when certainly I think grey hairs have kicked in over the last year or so. But I'll give you a bit of a background, as Mike reiterated, we're about top 20 in terms of size in the UK in terms of an accounting firm. We're very much there, and we can support clients right the way through their growth journey. And I think what we're about is very much the building a relationship with clients over over their whole growth cycle, so sort of right the way from startup all the way through to exit. I suppose from a criteria of why would you want to work with us, it is very much that sort of partnership approach. There are firms that come to us where they sort of outgrown their accountant, in the sense of they want more and want a sort of slightly more proactive approach and to help them grow. And also conversely, we get firms who just haven't had that sort of relationship from a slightly bigger firm. So we're sort of, it's the Goldilocks effect, not too big, not too small. And from my perspective, I head up the tech and media team, which has professional staff in all areas of accounting, servicing fast growth clients. And I suppose what we're looking for is businesses that are really, I guess, restlessly looking to grow quickly and have a good sector fit, so doing something innovative. And we look after all sorts of businesses within or different subsets of tech, and ultimately people who we like working with. It sounds ridiculous, but in every profession you should choose your clients and your customers and your suppliers. And I think it just really helps when the communication's good, and we get on well. Next slide, please, Cliff. I'm just trying to read the chat to see if there's any questions in there. Do you get customers who want to willfully do the tax ethically without anything offshore unsustainable? Yeah, I think that's a good question. I can maybe touch on that very briefly, but the government are getting much better at closing offshore loopholes and tax avoidance schemes, and there is some clients who have a certain element of risk in terms of what they want to try and do, but on the whole, you know, most of our advice is around sensible planning from a tax point of view. Happy to pick that up with Shax at some stage afterwards. We certainly do a lot of tax planning. These are sort of three kind of key areas that we look at. This session's very much in the bottom box, or whatever shape that is, in terms of running your business effectively. We do a lot in terms of attracting investment, really getting businesses ready for investment, and enabling cash flow, sort of some of the other areas, and tax advice that we've just talked about. Next slide, please. What we will do is share a link. This is something we put together. I remember reviewing this sitting out in the nice sunshine the late spring last year, which is scary to think that's nearly a year ago, but we put this scale-up guide together, which is really all the issues and some of the stuff we'll talk about today, but all the issues around investability, raising financing, growth. That's great. I can see someone's posted that. So please click on that link and get your copy and download that guide. It came from people like yourselves, founders, saying, where can I just get a sense of all the issues around growth that we're going through all in one place? So we tried to put that in a kind of very easy to read, hopefully jargon-free guide, which you can kind of click through and move about. So hopefully that'll be a useful tool. Next slide, please. Just some of our clients. We work with some names you might have heard, and we don't do everything. For example, Zoopla, we do some tax work, and some of these online retail brands that you'll have heard of. But I suppose from our point of view, we're not about trying to work with the absolute biggest brand names. We love to think that a lot of our clients will go on to be successful and be well known, but I think where our best fit is very much in sort of owner managed businesses who are looking to grow fast, but Not every UK entrepreneur has to be a unicorn within 3 years, but there's some great names that we have worked with. Next slide, please. I think there's some embarrassing quotes now about which I'm not gonna read, but I think what these clients and these came very recently from a sort of survey we did came through in terms of what we're about, which is very much kind of the supportive and partnership approach as opposed to sort of a supplier customer relationship. Next slide. So we'll show you this at the end as well, but what we've launched, because I think with all your businesses, and it's the same with accountants, we have benefited in terms of technological advancement, and there's so much out there at the moment that you can do to make your business more efficient in terms of cloud-based accounting software and services and advice. And I think the traditional accounting model where you sort of crunching numbers and a pile full of papers gone, there's a lot of software that Cliff will touch on. You'll know some of it already, but what we've got is an advisory service that we're launching, which is very much sort of 3 phases. One, looking at what clients and potential customers are currently doing and reviewing it, and then providing advice on what to change, what to implement to make things more efficient, and to put you in a position where you're able to grow and have systems in place if you're able to grow quickly. And then finally on the right hand side, provide that ongoing training and support. So I think what we've said very much for the Entrepreneurs Collective is we'll be happy to speak to anyone and provide a kind of an initial review of any of your businesses, which just to understand what you're on now and to give you some high level advice. And obviously if there's something more in depth needed, then happy to look at that, but to provide that as a kind of a sort of high level review as a free service to the Entrepreneurs Collective network and community. Next slide. Excellent. That's going to be over to Cliff. So please continue to post stuff in the chat, and if we can answer stuff as we go, we will. Otherwise, there'll be plenty of time for Q&A at the end.
No worries. Thank you, Simon. Good evening, everyone. It's great to be with DC again. And as Simon mentioned, we kind of put together top tips for scaling your finance team. And so essentially I'll kick off. I think Simon's spoken enough about Buzzacott to give you kind of a background to ourselves. So I think I'll just kick off with the top 10 tips. So number 1 from my perspective is initially when you go to set up your finance team and your finance function, I think the thought process needs to be around what you need and what your stakeholders need. So I think a lot of work is in relation to assessing stakeholder needs, whether it's your internal management team, which can be day-to-day operational ops numbers in relation to cash flow, in relation to KPIs, and on to management accounts. Then your investors will have similar but slightly different needs in relation to what they need and how often they need it in relation to management accounts, board pack, etc. And then customers will want up-to-date statements, invoicing, what customers expect from you needs to be built into the system, and also authorities, essentially standard compliance, such as the ability to submit VAT returns every quarter, year-end accounts and year-end tax. So when you're looking at the finance function, you need to kind of look at it holistically in relation to everything, all the output that you will be required from the finance function. And which it actually just brings it into a kind of a funny anecdote from a client. I think it was recently started at Buzzacott about 3 years ago, and a client came to me in relation to they're going through DD for a VC investment, and they asked me what are management accounts, which is obviously something we can assist with, but it's kind of just, it was odd that it hadn't kind of came into their consciousness that there was something that they would need to produce. So essentially that's kind of my step 1, literally look at the landscape. What do you need? What should you be producing? And then moving on, once you realize what you need, it's basically how do you produce it? So it's kind of almost reverse engineering. So you start with the output and work your way back to the input, the processes, essentially flow charting it so you can understand the skills you require, the software you require, and the time requirement. And then essentially, one scenario does not fit all, but essentially this kind of roadmap could be used at various stages, because essentially some of the variables will change. Capacity will change, your output will change, your customers will change. So essentially it's almost like going back to square one each time one of the variables changes, and just reanalyze and reflow chart it out and see where you come to. So that's my number 2 tip for scaling your finance function. And then we kind of move on to tip number 3. And tip number 3 is in relation to KPIs. KPIs, it's very good to develop KPIs very early on when you're scaling your business to track various different aspects of the business, such as your cash burn, such as your runway. How important is it to know your runway? How much money is left in the bank? How long will it last? And then the other specific kind of ops metrics, such as customer acquisition, value of a customer over a lifetime. Essentially, every business is different and every business will have different KPIs, but it's always good to start initially monitoring them. And you can also show, when you're preparing for investment, you can show to VCs how you've traced, say, your customer acquisition costs over the last 3 years. This is how it's gone from X to Y. So it's never too early to start putting in KPIs in place. And there's just a little bit of knowledge there in relation to just sense checking your KPIs, that they are specific, measurable, timely, relevant, nothing out of the ordinary. Even timely is just kind of very obvious. There's no point, you can't act on a KPI 2 years down the road. It's not as relevant as, say, producing a monthly KPI or a weekly KPI or a daily KPI, depending on what works for you, what is needed. So then I've probably gone very quickly, jumping on to tip number 4. Tip number 4 is that when you've gone through the process of ascertaining what you need, and we're kind of what output you need, and you've included everything on a flow chart, you set about building your finance function itself. So I think I've just given a very quick tech stack kind of example there. So you start off with your input. Your input through software, if people don't recognize auto entry is OCR software, so optical reading software. So essentially what it does is it reads every invoice and it automatically posts it to accounting software, such as Xero. Actually, this is actually probably a good point to jump in and see where we are with the poll. So the poll showing that 22% of people are on Xero, 11 QuickBooks Sage, and 37% of people are on none, which, again, just a top tip that's not included in my top tips here is you can never be on software too soon, because essentially it rules out so much human error, the ability to reconcile, and just how efficient it is in comparison to jumping around on Excel sheets. So I'll check back in with that poll later in case all people haven't had a chance to vote yet. So essentially, yes. So you basically, as a good chunk of people are on Xero, people understand Xero. They know how quick it is, how user-friendly it is. You don't need to be an accountant to use it. It's very intuitive. And then if you're looking to create high-quality output, such as a reporting pack that includes KPIs, Futurely, there's numerous options in the market, such as Futurely, Fathom, Spotlight, they all kind of do the same thing, but create a high quality report, more in-depth reporting than you'll get straight out of Xero. So essentially that is a basic tech stack, but obviously every company is different, every entity is different, every business is different. And that is very basic. You can plug in anything from HR systems into Xero, from stock control systems into Xero, say something like Recurly for SaaS revenue. So again, there's a massive ecosystem around Xero and QuickBooks and cloud accounting. I was reading recently that someone said that there's 1,000 apps in the sphere now at this point. So the market for apps and plugins to Xero has grown exponentially in the last numerous years. So there's great opportunity to utilize integrations and automations. And obviously any efficiency like that cuts down on time and cost, and also just errors and having different systems that are producing different numbers and then people trying to reconcile it from one to the other. So I think getting on a system, getting it efficient, getting all the processes it's here as tip number 4, but It's just a must as early as you can, and it just cuts down so much issues further down the road. So then just moving on to tip number 5, this after setting up accounting systems and configuring everything. And I think the next thing we move on to is clean data. This I could, in my too many years of experience, I could give many examples of issues people have had around clean data. And I think basically clean data is the lifeblood of the business, because you can't make good decisions based on bad data. You have issues around compliance, you have issues around customer insights. If you have a system where half the customers are inactive but not marked inactive, your metrics you're running off your customer lists are incorrect. You increase your productivity because you're not trying to reconcile different systems with different numbers, different figures. And then it obviously, the reporting that's produced out of having clean data on a good system is invaluable, because you're making decisions on that. You're also advising potentially VCs, your board packs. Everything needs to have high quality information to make high quality decisions. And then the last kind of benefit on that is the issue of correcting it at a future point. You might be bootstrapping initially and everything, there's a price point on everything and things don't happen when they should happen. And then I've had 2 clients come to me during the last year where they had a little bit of knowledge on Xero. 18 months in, they tried to post things and configure things correctly, and it ended up being an absolute nightmare to try and unwind, because they had various different apps plugged into Xero, duplication of transactions and whatnot. So having clean data and reconciling, the other thing is reconciling frequently. Reconciling kind of at year end is not really enough to be able to monitor all and make decisions effectively. So I think then moving on, my next tip is to review your in-house expertise. I think with this, I think people need to be kind of honest with themselves. Like, you have founders and co-founders, and then you also have sometimes a bigger team such as CTOs and stuff. From that, every member will have strengths and weaknesses. And I think Simon referenced it at the start. There's no necessity and there's no expectation that founders are experts in every facet of the business to scale it. So I think it's important to admit and get other support if it's finance and keeping the financial records are not your area. And the other thing leading on from your in-house expertise is actually to think about capacity. You might have the ability to keep to do all the administrative tasks to produce the monthly numbers, but also you need to play to your strengths. Is this a good use of time? For example, maybe you're better off on product development or lead generation. And it's also a caveat to founders, because I see this with so many clients coming in, is that there's only a certain amount of hours in the day. I have a client at the moment who is literally in the point where they need to take on someone such as an office manager, because his skill set is fantastic at his business, but he is wasting, he does not have the time to pull out the information for, say, management accounts. This is a client of ours where we do management accounts, and I'm getting emails at ridiculous time in the morning because the day is spent doing the day job, and then it's at night he's trying to catch up, which has a knock-on effect that numbers can't be produced potentially in time for board meetings and stuff, because it does not have the capacity. So it needs to either bring in kind of some supporting internally to kind of help out with that. And I think that is probably not a failing, but it's probably something that founders and co-founders overlook at the start, that there is only a limited amount of hours in the day, and the amount of time that admin tasks do take up is significant, and it just needs to kind of be assessed. I think then from once you analyze your capacity, I think this slide is one of my favorite slides of the top 10 tips. It's because essentially every finance function, irrespective of size, is literally built up of these components. So you do have your operational support, your strategic support. You have bookkeepers, financial controllers, and finance directors. And I think once you kind of ascertain what in-house expertise you need to find out where your shortfalls are. And shortfalls can be either operational, they can be strategic. Do you need an office manager to liaise with an accountant to pull out pull out invoices, make sure everything runs smoothly from that perspective? Do you want to bring in a bookkeeper to do the internal bookkeeping yourselves, so you have internal numbers? Do you want a financial controller to oversee it? Is there issues at the bookkeeper level where you want a financial controller? Do you then, obviously, as you scale, is there someone who's doing the finance director role, who's looking at it from a strategic perspective, such as matching the historical numbers versus the strategy? So these are kind of all questions that kind of you need to think over, and how much of each you need and how much of each you have. So you can kind of build out your finance function with a balanced approach. I think once that is kind of ascertained, it puts you in good stead for figuring out the next step, such as the budget. Based on what you need, what's the budget, and what will the likely cost be of it. So essentially you can manage it, that you spend the correct amount, you bring in the correct amount of support. And I also think that a tip is that you don't underestimate the value of having the correct support. The correct support enables you to scale faster. I've had a client of mine from a couple of years back. They had numerous locations, such restaurant locations, and essentially they were on different systems, each on desktop systems that weren't even in the cloud at this point. So we basically came in as consultants, changed all the systems and all the processes. So essentially they're on a cloud, they were able to consolidate, they could literally pull numbers at the click of a mouse in relation to the consolidated picture. Everything was automated, all invoices went in, all workflows were included, and also sign off from particular levels within it. So what happened in that situation is that allowed them to reduce the amount of basically operational support they needed, because all the time efficiencies were created within the system, and they actually cut down their team in relation to that operational support, and had more time and more budget to allow for more strategic support. So to get that balance right. So I think, as I mentioned on that slide, it's never too early to bring in support, to bring in the right support. And I think this is also another beneficial slide in relation to what we see. As Simon mentioned, with our clients, we support them right through the life cycle, but at various different stages, there's various different configurations that appear to work better for different entities, but obviously no two entities are the same. So, and also my life cycle stage, that's not a hard and fast rule of exactly what is a startup. Those kind of terms are a little bit open to interpretation. But what we see is kind of a startup, generally for a cost perspective, outsources everything. And then as they scale, they slowly bring things in-house, such as the basic bookkeeping function, and have outsourced management accounts or an outsourced kind of tax. And then as they move through their life cycle and become more established businesses, they mainly have an in-house solution, however, use support for, as I said, tax or structuring or oversight and various different bits and pieces, or for things like employee schemes and things like that, where the in-house knowledge isn't there. So I think that's a very kind of high-level view of top 10 kind of tips on scaling your finance team. And I think, as Simon mentioned earlier, like as part of our offer to EC members is an hour-long consultation to discuss current challenges and what you're facing on your growth journey, and also a high-level systems review, obviously free of charge, which is obviously linking on from, I just put up the slide again in relation to, so essentially it's a review section, nice highlighted orange bit, so kind of a review of systems. And as Simon mentioned, we're kind of happy to take any questions, so feel free to drop them into the chat box, and I will actually come back to the poll now. So yeah, we're still showing. I just shared the results there. We're showing 22% on zero. So zero seems to be the favorite of startups, which we can kind of see on our side as well. So that's interesting, and reaffirms our kind of knowledge on that.
It's interesting. The 37% number is sort of interesting. It's probably not unexpected necessarily, because for a sort of early stage, but I'd sort of say I'd be interested to know why that is. Is it just purely about cost? And I think, as you sort of you alluded to, Cliff, some of these accounting systems are not hugely expensive, and I think having a system and actually something like Xero is very intuitive. You don't have to be a qualified accountant to understand it and use it, and they're designed for that. And I think probably it's what puts people off, is the sort of the fear of starting it. But actually, if you play around with some of these things, you don't need a huge amount to be able to do the basics. And then it's just and I think there's some comments in the chat about sort of budget and cost, and you mentioned that as well. I think it's around then deciding what you can do yourselves and what you need someone else externally to add in to support you in some of those. But certainly, yeah, I think for those 37%, I think it's something to think about.
Yeah. And then, as I said, we're happy to have a Q&A now. Obviously, there's some questions we might get around to or want to follow up directly with, but I think if we kind of put a few questions out there is in relation to what your current challenges are and what you wish you'd done differently. So I just dropped off the screen share there. I could get back to the chat function there. So I'm just reading through the comments in chat.
Right, well, whilst I've got you guys, just to jump in, say thank you so much for a great presentation. I've got a question for you guys. So, you know, when the startups that you get come along, what is the number one issue that they come and ask you guys about? Certainly, I know for me, there's like quite a few complicated areas. You know, the R&D is tricky, end of year is always tricky. But I think certainly for us, you know, issues around options and employees, EMI schemes, all that sort of thing is the minefield. But I'm just curious to see what's the number one thing that you guys see.
Yeah, there's probably at startup level, there's two or three things aside from the stuff we've touched on now, and one of them is probably about structure and ownership, because I think, again, it's never too soon to start to think about those sort of issues. So a lot of it will be around how best to structure a business. There may be owners based here, based in the US. We do a lot with businesses coming over from the US and people looking to expand in other places. How best to structure the company, how best to structure it to incentivize shareholders. There might be sort of key management that founders want to bring in and are sort of trying to tackle those issues. And that's a tricky one. And I think probably what our initial advice around that is that there's always despite the early stage, there's always value in businesses, and you as founders in the community will know the value in their business. So we'd sort of advise against necessarily giving away, you know, huge equity right at the beginning for this, because actually you want to demonstrate there's some growth potential there. So a lot of our questions are sort of why would you just give away shares to someone that you need or may drop out in a year or so. So some of those issues just are good to sort out very early on. And the other one, R&D is a very, very useful tax incentive, and you know, certainly one of the best things that we do, which is sort of helping businesses to claim a credit and actually get cash back from HMRC, which is a great way to help fund future growth. But I guess fundraising is ultimately the key one, and it is a difficult one for the early stage businesses where you know you sort of need the money to grow, but can't get it because you're small. And again, it's getting help and doing things like you're doing, Mike, with the community, because you cannot shortcut this, and it does take time and it takes energy away from your business, but you can get help at all places, but it really is sort of working hard in that early stage to get that sort of early stage funding and be able to prove the business concept.
I think on my side, obviously, I think Simon's are probably the most asked questions, but I think I get a lot of questions in relation to kind of setting up systems and producing information for VCs, etc. I think that probably ranks up there. Yeah, and basically making sure that the underlying records are correct. I get a lot of people where they've kind of set it up themselves and want either a sense check on it, or that they want a completely an outsourced solution to help them, because essentially they're good at doing the day job, but necessarily the finance aspect, they just want someone to take care of it. And obviously that's where we assist a lot of companies scaling up. So.
Yeah, certainly. I know that when I I think the first year or two we did like our own R&D claims, and just the time and effort that we spent, and actually we ended up probably, once we sort of outsourced that to some experts, actually our R&D claim went up by probably about 20-30%. So it was just actually, yeah, we would have paid 8 or 10%, but actually overall we would have been like quids in, and I think that's one of those things. It's trying to work out which parts of the business are value add, and will bring money back to you as a founder, and which ones.
I think that's right. And it's very much the opposite, as Cliff said, it's a time thing. As founders, you're all wearing 3, 4, 5 different hats.
Well, that's the thing.
And being honest about what is the right, where should you be spending your time versus, yes, you can do some of this stuff, but yeah, it's the opportunity cost of it. Sorry, go on.
Yeah, no, I was saying I agree. Not only did it take a lot of time from myself and our sort of internal accounting person that was doing it, because they'd never done one before. So there's a huge amount of time trying to do it, but actually it cost us money because we claimed less. So,
yeah, the I'd sort of say on the R&D side again, for you guys, if there are claims that you're right now, HMRC is being pretty supportive, and for fairly small claims, it's relatively easy to sort of avoid inquiries. There's always a potential that they will come back and look at things. So I'd certainly advise sort of getting another pair of eyes on things. The last thing you want when you do go through a sort of a funding process is then sort of something like this coming up and a question mark over sort of slightly tenuous R&D claims, and it's just not worth it for the sake of getting it done.
Okay. So is that, I don't know if someone covered this question in relation to finance staff being expensive.
Yeah, I mean, I think that's, I saw that, and I'm sure whether we're talking about sort of external or internal. My answer to that is yes. There's a premium for finance staff who are, and the more that qualified they are, and the more experience, and for an FD, you can be paying quite significant amounts, and I wouldn't really suggest a startup needs a full-time FD. There are I guess from our perspective, what we see the most is a founder who, as Cliff said, doesn't have the time to do the sort of the basic stuff, and actually shouldn't be doing that, and it does take up time, and actually you can get a sensible, intelligent person to do some of this stuff who doesn't have to have sort of full-time or finance role. So it could be sort of office administrator or someone who can provide information and be trained, and that's what we do a lot of, is sort of training someone who isn't an accountant to do a lot of the posting and the invoicing, because otherwise you're sort of paying us to do it, which isn't cost effective. So I think there's it's a good point. And at the early stage, you don't necessarily need that. I'd say when you go through your, I guess, sort of first round of funding, when we're talking sort of, certainly when you're into sort of pre-Series A type funding, that's the point when you start saying, right, I really need someone now to manage this properly, because I can see the benefit that brings. And a lot of investors will insist on a sort of a more senior finance hire if they think founders don't have those skills. But
I think just in addition to that, to Joe's comment, presumably, I think what we, as Simon says, what we do see a lot of kind of a outsourced FD role for 1 or 2 days a week. That does add, just to comment on Joe's comment, is that yes, that can add a lot of value and push the business forward. And that is a solution we see many using, and it works well for them.
And just on the other sort of cost effect that I talked a bit about in answer to your question, Mike, about some of the issues we face. That with structure, certainly think there are staff incentive schemes which can again be sort of cost effective. Some of you will have heard of EMI, which is again another very tax efficient way to incentivize staff. So putting in an EMI option scheme, which again doesn't have to be hugely expensive. There's a bit of work to do evaluation, and usually there's some good law firms who can do the agreements pretty cheap these days. And that just means you're incentivizing staff and helping them to grow the business without necessarily paying them the salaries, and that could work for finance staff as well. So there's other ways to do that.
Okay, so I think we have another question in. So what are VCs looking for? I think maybe on the back you mentioned you get some people asking to be prepared for VCs. What do they look for from a finance perspective? What do they expect to see when they, I guess maybe you're talking due diligence rooms or what?
Yeah. The VCs will see, it depends at different stages, they'll see a lot of businesses. So again, there's a balance between overloading them with information, and at the early stage it will be providing them with enough information to understand at a high level what the business is doing in a kind of an IM, which might be sort of 8 to 10 pages and would include some financials. So aside from understanding who you are, what the business is doing and what the plans are and what the growth strategy is, the financials will need to be there, and they'll have to make sense. How in depth they are, that is depending on the scale of the size of your business and the amount of money you're looking for. If you're looking for sort of Series A funding, it will be some quite detailed forecasts which include sort of projections and cash flows and profit and loss. Right, we're looking sort of three to 5 years out. For very early stage, you might have that information, but it might be it's for raises of sort of under $1 million, it would be acceptable to have some financials in there. But I think for most investors would know that it's very hard to predict in that very early stage. So you tend to see a sort of a year or two of sensible financials, and actually beyond that, it's quite hard to predict. But I think. Yeah, so I think at the startup phase, it's what the business is, what's it doing, they want to know about you. And I think what we see is the biggest problem is, or not problem, but the most important thing that they're looking for is who are the people who are driving this business, and what are their skills, and are they actually going to achieve it, and that because they're buying into you as individuals.
Yeah, I think exactly, Simon. I think one other thing is I think VCs also, they want to know that you understand the business, which is kind of fundamental, that you understand your business, your market, and that's where understanding the financials, understanding your model, and understanding KPIs and what are the exact drivers of your business, because obviously you can model that through in KPIs, that you understand if X happens, the result is Y, and how you drive your business forward. So I think that is great for a VC to be able to see that you actually understand your business and whatnot, rather than just be able to produce a profit and loss and balance sheet.
Just seeing how likely is HMRC to audit a startup. I guess that is if that question is coming from a so how likely are they to audit it in the sense of investigate sort of a tax issue, depends. That they have the right to look at anything. If we're talking about sort of R&D tax credits, how likely are they to sort of question those? There tends to be a sort of a threshold once it gets into sort of six-figure numbers that you'd certainly put a lot more detail and support behind it. I think obviously in a startup position that you tend to be loss-making at that early stage, so I think it's unlikely that they would start at this stage sort of questioning costs and looking at tax charges, but we have seen it, and we'll see. We've had clients where VAT inspectors will look because they haven't made revenue for quite a long period of time, and actually say, well, hold on, are you really in business and should you be VAT registered, etc. So it isn't
just echoing Simon's comment there in relation to the VAT. What we're finding now, I think maybe it's another knock-on effect of COVID, is that there is more inspections and VAT returns. But we're finding for startups, especially a lot on the first VAT return, because chances are it's a refund position and it's generally for a large amount, and there's no track record with the HMRC of, oh, they've always been in refund position for X reason or whatever. So we often find that the first one is queried, but obviously once you can provide the supporting information and the data underpinning the return, there's absolutely no issues.
Okay, and we've got another question worryingly here. How likely is HMRC to audit a startup?
Yeah, I'm not sure what that when we say audit, I mean that they may HMRC would make an inquiry in the sense of they could look at it. Yeah, is that?
Yeah,
presumably. Yeah. They generally, when they mean audit, I think they just mean reviewing or looking into either the corporation tax return, the R&D claim, or the VAT return, which we kind of spoke to there in the last couple of minutes. Yeah. But essentially, that's the three angles, and as Simon mentioned on the R&D claim, and I spoke to the VAT.
Yeah.
And they do make right now they are busy, and they are, the time period for things is slowed down, so we're not seeing a huge amount of investigations, but they go after sectors and different things, and they have their
I guess one for me is an interesting one, I think, from this year is the bounce back loans. Like, I saw a lot of I heard about a lot of abuse of bounce back loans. Especially people with, I heard a lot of people with holding companies with like 2 or 3 subsidiaries, pushing revenue through multiple companies and then claiming like bounce back loans across like all of them.
There'll definitely be some, and there'll be some high profile cases that I think will suddenly trigger have triggered a lot of that. We've definitely seen some of that as well, and I think the high profile furlough cases as well, where people have sort of claimed furlough monies. I think that's almost a bigger one, but then sort of gone on to make massive profits, and not necessarily a startup issue, but more the sort of bigger corporates.
Yeah, and I've seen some people claiming the furlough schemes and then also making their employees work.
Yeah, we definitely advise, and we've had this with a few clients, just to make sure they've got clear documentation that shows that they've communicated that they've been furloughed and that they're not allowed to work, etc. in place, and then actually going to the point of not enabling them to work. And certainly, any sort of abuses on that are likely to cause issues.
Yeah. I guess one last question here, just for you guys, before I guess we wrap it up, 6:59. Okay, maybe a follow-up on the what are the key metrics to show in a deck for seed funding level? Many thanks. Okay.
Yeah, I mean, I think from a seed funding point of view, we'd want clients, investors would want to see a profit and loss account with normal sort of statutory headings of revenue, profit, net profit, gross profit. EBITDA is typically one that you would use. So again, taking out certain things that would be sort of deductible. I think what I would definitely advise, and from a putting a plan together, you definitely want to look at run rate. So where you are now as a startup, and what your numbers will look like over the next 12 months is going to be very different from historic. So putting in your sort of, maybe you filed a set of financial statements which is sort of negligible, you certainly want to put in what your year is looking like for the next 12 months. So obviously looking at that and then looking at multiples on that run rate can change your valuation significantly, which is why we definitely suggest sort of, if you haven't done that before, certainly getting someone in to have a look at putting that together and giving it a sense check, which again, we or others around here, there's a lot of experience in the community of doing that. Certainly for tech companies, a lot of what investors are interested in is retention rates. If it's platforms, it's sort of people actually buying, how long they spend on websites, and different. It obviously differs for different industries.
Okay, great stuff. Well, I think we're going to wrap it there. So just past 7 o'clock. Once again to say thank you to you guys for a great presentation, and for everyone for attending. As Simon mentioned, and Cliff, they are offering a free consultation for you guys. So please do reach out to them. What's the best way for them to reach out? I guess you've got your LinkedIn profiles there. Do we have an email or anything for them to get in touch with? So
yeah, we can put the slide up. Email or LinkedIn is great.
Yeah, so the LinkedIn profiles are there. Why don't you can approach on them and just mention EC and free consultation, and they will happy to look after you. And as I mentioned, we've got another event on Tuesday, so hope to see some of you guys there. But thanks again, guys, for a great presentation. So let's see.
Always a pleasure.
Thanks, mate.
Yeah. Okay. Cheers, guys.
Cheers, everyone.
Thanks, everyone.
Thanks.
Thank you.